Good day to everyone. This video is going to pertain to using the ribbon bounce with the signal indicator for taking 5-minute trades. And let's go ahead and set it up. So the first thing we're going to do is we're going to go ahead and add the ribbons right there. We're also going to add the slow and fast. Now you get 3 lines you can use. If you have a particular setting that you like, you can use that. We're going to go ahead and we're going to stick with the 50. I'm going to change this one because this is something I prefer. We're going to change that to 20. That's 4 lines actually. So you got options here. I'm going to change this one to 22. Okay. And we're going to go ahead and put that for 0. If I remember correctly, that'll make a default. If not, we can just put for non-color over in the color section. Okay, so yeah, so it only gives us 3. So we'll probably just on the safe side, we'll go ahead and make the lines a little bigger. If I remember correctly, orange, this one here, the top one is the 50. I'm going to make that a big one. And then we're going to change so everything kind of matches up. We'll make this one blue as well. There we go. And we'll make the line 3 just so it's a little thicker. There we go. Yeah. Okay. And then before I go into the signal indicator, we're going to rehash these lines. And this is currently a 1-minute chart. So the white ribbon, the white ribbon, the red ribbon, and the green ribbon are key areas of where the market may bounce in versus, the smaller areas, like if you did 20, 22, or a 10 line or a 9 line. We know here at this line, the white line, the red line, and the green line, that these are key areas where candles usually will do something unless there's a complete breakout or something like that. Okay. And you can kind of use these when these are touching as a wall. Like if it's white's on top of red, think of it as like double strength, unless the market's completely changing direction. Okay. So usually if the white ribbon is above these ones, we know we are now going into an uptrend. And then let's see, it's not there yet. So we'll go ahead and back up. Right here, the white line finally came crossed. So we now know we are in a downtrend. Like it's not a small downtrend, you know, or me. We are literally going down now, even though it may come up a little. All right, but we're still in a downtrend. So even with these candles coming all the way up here, because this line did not cross over, we know we are not in an uptrend fully yet. We're just testing the market, but we are still in a downtrend. So if you were long trading, institutional trading, okay, and you got in, let's say across, that's the retest right there. You could get in and ride this all the way down to here, and then once it crosses, if it passes the red line, you want to get out. But if you're more of a short-term person, you would have your stop loss following along on all these little areas. So either way, this one's a little bit troubling because this one you could have just broke even maybe, depending on where that height is. Let's see, right? So it's basically right where we started. So And if your stop loss was still stuck at this area, you would have still been in the market riding this all the way down. Okay. But again, once it hit this red line, you'd want to get out. Uh, but if you're the most traders, you would want to get out here at this line. Okay. For new people, if you're a more advanced person, you know exactly what you need to be doing here. Okay. But if you're new, you definitely want to get out at the white line. Okay. Um, and if it gets up to here, you should definitely get out. Okay. This is optional because maybe it'll come down, but once you see you definitely want to get out once it gets up to here. Okay. But now you kind of get the idea for that. So white line does not mean buy or sell. Red line does not mean buy or sell. Green line does not mean buy or sell. These are just key areas where candles react and do things. Okay. And the signal indicator that you're going to be adding, it's going to pick out certain areas for when there's a lot of power going on to recognize things, to ride the trend up is what you're going to be doing. So instead of always like capturing right here, it bounced and getting your trade for going up for 1 minute or 5 minutes, or like same here, came down, bounced off the 50 line, you know. Uh, but we're going to go ahead and now we're going to go and add, let's see, let's bring up the navigator. Okay. And we're going to add, where to go, linear regression line. And you can change the input on it. I got it set for 6 on that one. I don't recommend you change this one. You can to fit if you know what you're doing, go ahead and change that if you like. Okay. I'm going to go ahead and add it. There we go. And now we're going to add the signal indicator. Right. I just want to check something real quick. Okay, yeah. So you can change the colors on things if you want. I just leave it as default. There we go. And what this does is to help you to pick on certain areas. Okay. So we got that set. I'm going to close that. So that's just using the ribbon, the signal indicator, the slow and fast, and the linear regression. And this is to help you guide. These lines are to help guide you to understand which way the market's going and to be able to capitalize on these signals. All right, because we're not going to want to take every signal. And now we're just going to go ahead and back it up, and we're going to walk through it. And keep in mind, you're not going to win every one. All right, so money management is required. I'm just really backing up pretty far, so this way we can go over. I'm going to try and keep the video down to like a half hour and no longer than an hour. We'll start here. Okay. I'm going to zoom in. Okay. So we're starting here. The white line has crossed between both of these, so we know we're in a downtrend. Okay. So we're not going to, you could kind of use this if you want for more, but we're going to start here and work our way. Because this happens quite a bit. Okay. And once it's crossed down, you don't ever want to take a trade going up. You want to wait to see what the market does first. All right. And then once, because it's so far below the linear regression, and you could see there's a hard trend pushing down, you could capitalize and take a 5-minute trade going down and win. But we're not going to do that for this round here. We're going to start here. Okay. And we're going to go down. So we have the grid in the background so you can see along with it. So now we see we have a clear back. Okay. Now you can get a signal like this. Okay. Now remember, we're taking 5-minute trades, but we can see that there's a um, consolidation going right here with these 3 candles. So we would ignore this signal. Okay. But we got an idea that it's pushing down because of this. This is down hard, that's down hard, that's down hard. This is below the lines. And my signal indicator works off pressure. It's looking for a lot of strength for a direction between buyers and sellers. Okay. So we got an idea it's probably still going to go down. So once we get that, you could come over, you see it's not passing the linear regression, and then you're smalling out. So we could probably go for a 5-minute trade right in here off of one of these 2 candles and get a 5-minute trade going down. Okay, now we're coming down. That would have been a win. And then we're going up. We've crossed a linear regression line. And then it bounced at the 20 and 22 line, came down. Okay. Now, if you're not going by signals and you're just going by this kind of move, do a 5-minute trade. Let's see what happens. 1, 2, 3, 4, 5. And you would have lost. Okay. So if you know what this is, maybe you would want to be looking to take like a 1-minute or 2-minute trade. Okay. But if you're just going by signals, we would ignore this section. Okay. Uh, Same with this one, you would kind of ignore it. But again, I can see it. I would capitalize on it. Here, I wouldn't be really looking to take a 5-minute because this right here was this far down and then it came up. So it could be getting a new higher high or lower high, but you get it. Okay, so we're going to wait. Now it's crossed over. We're not looking to take any trades going up because everything here is on the down. So we're only looking to take down. So if you were to here capitalize and take a 5-minute trade, we would have lost. Okay, even if you got your trade in here somewhere towards that, you still would have lost. And right here, we're riding along. If you took a 5-minute trade here, you would have lost. So it's 2 losses in a row. And then, because remember, we're trying to ride the trend. So if you would have took a trade here for 5 minutes, let's say top of that one, because just before that candle closes, because that circle is still there. All right, so we'd get our candle in just before it closes. So your trade would be up here at the top of this red candle here. So let's go 1, 2, 3, 4, 5. And that trade would have been a win. Now we're running into it again. So assuming you trade, this one would have been a loss. Now we're coming along. We got another one. This would have been a win. And coming down. This one here would have been a win because you get in just before this candle closes because that circles, because this circle will appear and disappear at different times during this candle depending on what's going on. Uh, if the criteria for the signal is being met, it'll pop up. But if the criteria disappears, then the circle disappears. So always wait till 1 second before this, like if it's counting down 5, 4, 3, 2, 1, and you get to 1 and that circle's still there, put your trade in for 5 minutes going down. And this one would have lost. Or I mean, this one would have won. Okay. And then we ran into it again here and we would have lost. So now we're riding along because you can see we're basically consolidating here. So now we're going into this one. We only take one trade at a time. So if there's another one popping up, we ignore it. So let's just assume we got in here. This would be 1, 2, 3, 4, 5. We would have lost. Now we don't take any trades going up. We're only looking for down trades. Because let me zoom out. There we go. I think it's right here. We're only looking for down trades because the white line is below the green and the red line. Now we're going to zoom in. Let's get back to that section. Okay. So we have a circle here that crossed the white line and then came down hard. Okay, and we knew there was a bunch of consolidation here. We know there's a hard level right here. So you may want to avoid this when a candle's that big and you got a circle and it just crossed and now it's crossing back down. I would ignore that signal. Okay. But if you were to take it, you would have lost or lost. Let's just double check. Got in here. So 1, 2, 3, 4, 5, you would have lost. And then here we have another one. So if you got your trade in here, 1, 2, 3, 4, 5, you would have won. And here. So if you got your trade in, 1, 2, 3, 4, 5, and you would have won. Now, even though this is popping up again right here, I would not take that trade. Okay. Now, sometimes if I'm feeling confident after I got my trade in here, even though my recommendation is only take one trade at a time, when I see it pop up like this and it bounced again, I may take another, but that's me. So if for anybody new or anything like that, I recommend one trade only. Okay, so you would ignore these two telling you to take a trade. Okay, for 5 minutes. And you can use these signals different ways as well. Okay, so we have one for going up, but we don't take any trades going up when the white ribbon is on a downtrend. So we ignore all of these. We ignore this. Now you can take that trade because you can see it came up to this line and then got rejected. Because remember, that's like and just to give it clarification too as well, think of the green line as like a very uh, hard wall. The red line is a medium wall. Uh, so it's not as strong. And then the white line is a small wall. So it's even less stronger. Okay, but if I'm familiar where I would take a trade because I'm familiar, this is designed for what I look for. I would actually put my trade in here for 5 minutes going down. So let's go ahead and zoom in and see if I would have won that. So we got it for going down. One at the end, 1, 2, 3, 4, 5. It looks like we would have lost that. or you could have just ignored it because it wasn't below the white line. So here we go again. We got it. It's also below the linear regression, which is a good thing. So getting in at the right here, 1, 2, 3, 4, 5, and that would have been a win. Here we go again. We got it again. Get in just before it closes, if that circle's still there. One, oh, we get one, oh, right here at the end, one. So our trade would actually be up here. But 1, 2, 3, 4, 5. That would have been a win. Okay. Now on something like this, we have the whole big wick coming down. That is a very long wick. So this lets me know when you don't have any real body to a wick, okay, you really don't want to be taking a trade on something like this. This is pretty scary wick when you have a small candle like that and a very large wick on both sides, okay? That means if you don't know what happened here is when this candle closed, it skipped. It skipped all the way down to here, okay? And then it rose all the way back up. It rose all the way down, or, or it lowered all the way down. But in order for this to happen, it skipped. And they call that slippage. If you're not familiar with it, I'm not going to go too much into it, but you can do a Google search for what is slippage in trading. And that's what exactly happened here. Okay. But one thing you can kind of take away from slippage is when it jumps down like this a lot of times, the next candle will go down. If it jumped up, usually the next candle will go up. Not always, but a lot of times. But so because of this candle, we would completely ignore this. Okay, we would. Now, you could capitalize on this if you're more professional of what you're looking for, but we're only looking to take trades going down. So we'd ignore all that. So right here, we had a trade for going down, and if we took it, we would have lost. Now we have this one here. This one would have been a loss. So now again, we've had 2 losses in a row, and I think that's the max we've had so far. Maybe 3, but I think it's 2. We would ignore this one. And as you can see, the white line and all that is starting to come a lot closer to the red line, or the candles and the white line and the other one, they're starting to come a lot closer to the red line, the red ribbon section. So we're most likely going to be going into a transition here from going down to going up. But for right now, if you're not a more professional person and you're just looking for something simple, kind of to take a trade here, this will work for you. So we would ignore this. We can ignore this. And as you can see, it finally broke through the red line here, or the red ribbon. Came down, it's retesting, and then it's going up, and now it's touching the green ribbon. So it's testing that, and it got rejected. So for those of you who know what you're doing in regards to rejection areas, you could have capitalized on that. Now, when these ribbons start touching each other, you kind of want to just stay out of trading. You don't want to make any trades unless you know what you're doing. Now we're staying out of this because the white and the red are touching, these are crossing, and we're between red, green. So we're consolidating to determine where we can put the market. So we're ignoring all signals. As you can see, we've done a lot of consolidation here, going up and down. Okay, we have no clear movement yet. We need to see these ribbons start breaking away. Now right here, it's too early to see if the ribbons are breaking away from each other. But if you know what you're doing, you could have capitalized here. But once it comes back up, we ignore everything. We need to see clear movement in these ribbons. All right, we're starting to see some breakup. We have some breaking up right here. So it started breaking up right in here and getting spread where everything's starting not to touch anymore. So if you're a person who know what you're doing, you could capitalize there and capitalize here. Okay, but if you're just going by signals, here we go. So remember, we've only had 2 losses so far that we took, and we're about to take a third trade, and we ignored all those ones in between. And so assuming you got in here, it'd be 1, 2, 3, 4, 5, and you would have won. Moving on down the line. Here we go. Get in. 1, 2, 3, 4, 5. That'd been a win. We ignore anything going up. Now things are crossing over. It's getting hectic. So we ignore stuff going on here as well. Remember, we want good, clear movement. Okay. So we ignore all these. But again, if you're just like 1 minute trades and you're familiar with the bouncing, which is in other videos before this one without the signal, these are key areas to look for your 1 minute to 5 minute trades. But we're just going with signals today. Okay. So we're ignoring all these signals. We're ignoring. All right, we got some good clear movement right here because everything is separated. And when everything's showing moving down, so assuming you got in here, 1, 2, 3, 4, 5, and it looks like we would have lost that one because just a little bit higher than where we got in at. Or maybe we tied? I don't know. What do you think? No, I'd say we lost. All right, here we go. Get in here. 1, 2, 3, 4, 5, and that would have been a winner. And if you just take one at a time, you'd be moving on. If you realize what's going on, you could get in again, and you would have had 2 trades there as a win. But just assuming one, okay? So far we haven't got more than 2 wrong, possibly 3, I'm not too sure, but I definitely know 2. Okay. Coming back, we got our signal, taking a 5 minute trade. 1, 2, 3, 4, 5. That'd been a win. We have another one. So assuming we got in at this area, 1, 2, 3, 4, 5, we would have lost. We ignore this because it's going up. We're only looking to take down trades right now. Right? We ignore, ignore, ignore. Everything's too close. And then finally we got a spread. See? So assuming we got in right here. 1, 2, 3, 4, 5. That'd been a win. And then we also had another signal. So it's 1, 2, what's it? 1, 2, 3, 4, 5. Okay, so we had that plus So if you wanted to, you could have got in another trade, but you had to double there again. So if you got in, because this one would have closed out and now you're free to take another trade. And if you got in here, 1, 2, 3, 4, 5, and that'd been your win. We ignore up signals. All right, let's go in for the down. So let's see, we get in right in here. 1, 2, 3, 4, 5, and we would have lost. Okay. Okay, we're ignoring any signals that may come up. All right, now the white line is starting to cross the green or the red. It's also crossing over here. So, and again, we don't take any trades yet until we have confirmation that we are in an uptrend, which we now have. Everything is now reds on the bottom. You have green, white, yellow, blue, and then the linear regression line. So let's say you got your trade in here. Okay, at the end, 1, 2, 3, 4, 5. You would have won because now we're only looking to take up trades because everything is on the up. Okay. Now for those of you who don't know, when the major cross happened was back here. So, and then it came down and tested. So for those of you who know what you're doing, this would have been an area for you to capitalize on without any signals needed. And then it came back down and retested this zone. So you could have capitalized for an up trade. Okay, but we're just going by signals. And again, we ignore this one because the white line has not crossed completely over yet. And here's where we got the full crossover. And if you were long trading, let's go ahead and back up. If you were institutional trading, okay, so you could see where it came. You'd want to probably get in here because this was a retest, or right here. It's your choice. If you're in institutional trading, you could ride this all the way up to here and get out if you want it. Or if you want to stay in longer, boom, rid this up. Okay. But once you see that it only made it this far and went up, came down, you would probably definitely want to get out. But a good trader would have a following stop loss, and they would probably get out in here. Okay. So you can use the signals as a thing to say, hey, get out. We're going to zoom in now. Where was that clear movement crossover? Right here. Right there. Okay. Right. Yeah, right here. So this is the one we would have won. We had it here again. So assuming we got in right there, 1, 2, 3, 4, 5, we would have lost. We don't take any trades going down because we are clearly in an uptrend now. All right, here we go. Right there, assuming we got in right here, or no, be right here. This one's a little rough. So 1, 2, 3, 4, 5. That would have been a loss. So was that 2 losses? No, we don't take that one. Then up here, 2, 3, 4, 5. And I want to say, yeah, I want to say that could have been a loss for sure. I can't really tell. I'm going with that was a loss. So we're on 2 losses now. Okay. And we ignore these because it's going down. We're only looking to take trades going up. Let's see. Yeah. Yeah. So if you took this one, you would lose. Assuming 1, 2, 3. Yeah. For me, this is kind of etchy because everything's so close together. So I would ignore this because everything's so close together. You can see we're kind of trading. It's going up and down. It's not going very far, you know. But if you, let's say you did take that trade, we'd be at three losses now. And here we go. We have some good clear movement. Now remember I was telling you how everything's so close together, so it makes it etchy or tricky versus where you have clear movement like you have here. So assuming we got in right there, 1, 2, 3, 4, 5, been a winner. If you were daring enough, you would have been a winner, but we only take one trade for newbies or for new people, and then get in again. One right here at the end. 1, 2, 3, 4, 5. You would have won. So far, everything we've gone over, our max is three losses in a row. Okay. We have no signals here. Now remember, this is a 50 line. So when it came down, you had the doji candle, then it came down more. And doji candle did touch the 50 line and couldn't make it past. Then it shut down, couldn't make it past. Then you got your nice green one, and then we have a good push for going up. So you could possibly take your trade in for 1 minute or 5 minute going up if you're that kind of trader. So here we had another skip, okay, where it closed out here, but then jumped down to here. And again, that's also called slippage. So you can just do a search on or YouTube and say, what is slippage in trading to see what this is going on. Okay. And this is the regular market. I'm pulling the information, I believe. Well, I'm pulling it from them, so they have their own little thing. They don't exactly match up with the regular market on pocket options, but they're pretty close. I found Oneida trading platform. Their candles seem to match up the best for regular markets, not OTC. Okay, we ignore all these because we're only looking to take trades going up now. So on this one, if we took it, we would have lost. Ignore all these. Ignore those. So there's some good movement, but everything's pretty thin. But let's say you did take it, you would have lost. Okay, so we'd be at two losses. Now right here, everything's so close. You could treat this as a wall. So let's just say if we did take it, okay? 1, 2, 3, 4, 5, that'd be a loss. So it'd be three losses. Right here, 1, 2, 3, 4, 5. You would have won. All right, so our max so far is three losses. And this one was a winner. Now we ignore, and here we go. We got good clear movement. So assuming we got in here at the end of this, 1, 2, 3, 4, 5, that would have lost. And then let's see, we had pop up again. 1, 2, 3, 4, 5, we would have lost. Wow. So it's pretty because it's trading sideways. So when it's small like that, you can make that determination. But if you're just using the signals, and this is a clear move up, okay? And then let's go 1, 2, 3, 4, 5. Another loss. That sucks. What happened here? What's going on? because there was a big dive there. So right here, this sucks. It was 3 losses. Okay. And then we go into this dive down, which screws with the candles. And we would ignore all trading here if you're just going by signals. Okay. And then finally, we got something here. So it's a C. 1, 2, 3, 4, 5. I think that would have just barely been a winner. Yeah. So you would have won, but just barely. And because you just barely won, you would ignore any trading here. There's a lot going on here. If we have a big giant candle right here, things are changing. Okay. And then say we ran into another one like that. So let's see here. There we go. Say we got in here. 1, 2, 3, 4, 5. That'd been a winner. Now, remember, one trade at a time. This one was before, and we closed out on this candle. So we would ignore that. Let's go over here. Let's say we got in right here. 1, 2, 3, 4, 5. That'd been a winner. And remember, we only take one trade. And because this happened after, so this wouldn't even be taken. Let's see, we had this. Let's see what happens. We get in here somewhere. 1, 2, 3, 4, 5. That'd been a winner. And again, we ignore this one. But I'm curious, let's say you did no, because you'd been up here. So yeah, and you're closing out over here. All right, so we ignore anything going down until we have more clear information, even though that would have been a winner. Right now, I'm just giving you a very simple way to capitalize using the signals without and how to ignore certain ones if you're not familiar with other things. Because with other information that are more for people who are more advanced at things, you can capitalize on the signals that we aren't taking. Okay, so we ignore these ones because we're only looking to take up trades right now. We ignore that. We ignore those. Okay, we're going into transitioning here. Okay, let's see. We got this one. Let's say we got in here. 1, 2, 3, 4, 5. We would have lost. We ignore all these ones for the time being. All right, we got a good transition now. The white line is now below the other lines. So we are only, the white line is below the green and the red. So now we are only looking to take down trades. Now, if you realize what was going on here and you got this, you could have capitalized and got a 5 minutes. But if you want to play extra safe, you wait until this crosses those lines to make down trades. So we're waiting. And here's where it's a retest. So, and we don't take any trades for going up yet. If anything, because this is a retest for that section, you would be wanting to take a trade for going down for 5 minutes. And again, everything's so close to here, we would ignore all of this because everything's so close. We're only looking to take down trades, so we would ignore this. Now the white line's too thin to be doing anything. When it's this thin, you usually just want to stay out of the trade. We want to see a good spread. And again, if you're more advanced, you can see like this, all the lines right here are right. This has become like a very hard wall. Um, think of it as like steel. So it's going to be hard for us to figure out what's going to happen, if it's going to go up or go down. But because this is on the bottom, we can kind of treat this as a retest. And then when you got my signal indicator here, you can be, okay, it's going down. Got your 5 minute or 1 minute trade in. Okay, so we have good clear movement here. So assuming we would have lost here. Okay. So that'd be one loss after a win. We ignore these. This one, let's see, two, three. This would have been a loss. This one been a loss. Let's see if you got in just to make sure. 1, 2, 3, 4, 5. Actually, this one would have been a winner. This one's a little bit lower than this one, it looks like. Not too sure. Let me get a little better look here. Maybe it's hard to tell. Let's do a line. Let's draw a line just to make sure. So we'll do tools, insert, a line, horizontal. And where was that? Right here? So it looks like we would have either tied out, lost, or won. That's too hard to tell because they're both touching that line. Yeah, so it looks like it's exact. So let's say we tied out on that. Not too sure. But worst case, we'll just say we lost. Okay. We'll just leave it for now. So that's where it was. And we ignore because we're only looking to take down trades until we have more confirmation. Okay, so it looks like it has crossed over the green and the red. So we'd be looking to take up trades. Assuming we got in here. 1, 2, 3, 4, 5. I think we would have won. We can confirm that by. I used to know how to just grab these and move them. I haven't used them for so long. There we go. So we'll move it over to there for the time being. There we go. So assuming we got in here. 1, 2, 3, 4, 5. All right, so this one would have been a loss. So I think that brings us up to 2 losses. Maybe 3, I forget. 2 or 3. And then we come to here. We get in there. 1, 2, 3, 4, 5. We'd win. We ignore for going down. We got in here. 1, 2, 3, 4, 5. Let's bring that line over. So assuming we got in right there. Looks like we barely won. Let's zoom in and see if we can get a little closer on that one. I think, oh, no, we're as close as we can get. That looks like a winner to me. I can't. Let's go ahead and remove the linear regression line. delete. Okay. So it looks like we won or tied out. And now we're going to go ahead and re-add the linear regression line. Okay. So going along, we'll get in here. 1, 2, 3, 4, 5. We would have won. Um, Now, again, because this is popping up on that, you'd want to kind of ignore this one. If you did decide to get a little greedy, let's see if you would have won. 1, 2, 3, 4, 5, you would have lost. Okay. Zoom out a little. Okay. We're ignoring everything here because it's on a down. We ignore because the white candle has crossed into this stuff, the red and the green area. So we ignore until we have good, clear movement. Right here is where we have good, clear movement. So let's see if you got in here. 1, 2, 3, 4, 5, you would have won. And because it's above, we don't take any trades going down. And here's where it crossed over, so it can be, but we don't have any signals. Okay. And we would ignore these ones because it's below the green line and the red. And then here it's still crossing into the green and red. We have no good clear movement yet until we get to here, and it's below, so we'd be looking to take a trade going down, even though this went up. Okay. And that's why I was saying these signals can be used different ways, but we're just going with a simple ribbon bounce strategy for 5-minute trades for taking trades in quality areas. So again, we ignore everything because there's no clear movement. We got some good clear movement here. So we'll go ahead and get in right there. 1, 2, 3, 4, 5, and we would have won. And then it goes back into going into all this again. So we would ignore this because we don't have clear movement yet until we get over to here. And now we're looking to take a trade for going down because the white line is below the red and green. So let's see, we got this 1, 2, 3, 4, 5, and you would win. All right, now, even though there's plenty of information there for going up, we would ignore all this with just the simple basic strategy because there's no clear movement until after here. We don't have any signals that we don't take for going down. Here we have for up. So let's say we got in there 1, 2, 3, 4, 5, and you would have won. And we would ignore the second one because we have a trade in already. Now here we got it again. So and there's good clear movement. So assuming you got in here, 1, 2, 3, 4, 5, and you would have won. Now we're approaching on to almost an hour, so I'm going to cut this video. Um, in this way, it won't be too long. And an hour long time video, that's pretty long time actually to be watching something. So if you made it to the end, congratulations. You did very well. It shows that you really cared to learn what you were seeing in front of you and what I had to offer you. And I truly do appreciate that. So you enjoy the rest of your day and Happy trading. And I'll have more videos coming out for different things on how to use the ribbon bounce system for binary option trading strategies, for using these all different ways. Because not everybody can get one particular way. Maybe one of the other ways that's provided along with it, they get that one and can fully grasp it. Okay?